Hello and welcome back to the SovrenFx YouTube channel. So today I'm going to talk about ranges and how to trade ranges. So the first part, I'm going to show you how you could have entered today's live markets using ranges and how to actually go to your entries. Then the second part, I'm going to teach you the concepts and how you could have yourself throw them out perfectly, which will help your trading overall. That is if you use price action strategy as I use. Okay, with that, hope you are having a great day and trading successfully. So first things first, let's start with GJ. I'll only draw them out, pause the video, try and see if you could have predicted what I would have done. Okay, so GJ, you have range 1, range 2. Okay, so I only deal with first and second ranges basically. Okay, so what happened here? This was the range 1, we have our range 1, and over here we have our range 2. Okay, so when I only take buys above range 2, and also you're asking yourself, why do I only take buys above range 2? So this goes in line with the bias, the daily bias. So one of the rules of using ranges is that always take trades using the daily directional bias. So this day the bias was bearish since the previous daily candle closed bearish. So that's why your range 1 is where you take your sales going down, and only to avoid fake outs is when you're going to have buys above range 2. Since it happens so often that price closes above range 1, then fakes you out and closes above range 1, below range 1, I mean back into range 1 to fill the range and continue with the directional bias, which is bearish. That's why you have a range 2. This is to delay your entries such that you can't be faked out. Okay, so on this day the bias was bearish, so you had range 1, range 2. You only take sales in range 1 going down. Range 2 you can't take any trades. Then any closure above range 2 you have your buys. So that's with GJ for today. I took this together with the group, so this was range 1, range 2. This is why I took my buys, had my stops at around 15 pips to go ahead and give us a 1-to-3 ratio at around 40 pips. So this was today's trade on GJ. So okay, I'm going to go over GBP USD using ranges too, so that you can have a better grasp of the concept. You can pause the video maybe and try to highlight in your mind where I draw the ranges, so that you can also understand better on how you could take these trades on your own. So in GBP USD, what happened is that we had to drop to the 30-minute charts to have a clear visual on what was happening in the markets during that time. You always want to have your analysis as in from up to bottom, basically a drop down analysis. You start from the higher time frames as you go down, as you try to tell stories using the candles. That's how price action works. So here we had a range 1, range 2. The daily bias was bearish, such that we could take sales anywhere within range 1, and any entry opposite to the daily bias would be taken only above range 2. So let me label them. So here we have range 1, around here we have range 2. Okay, so what happened is that price closed above range 1. Okay, what do? We do nothing. Basically, we are not sure what would have happened at this point, because price would have basically just moved down and continued with the bias. So we had to wait for a range 2 breakout such that we can enter a trade opposite to the daily bias. So price closed above range 2, beautifully executed a long position, had our stops at around 10 pips. So we aimed for 1 to 2 because we had already taken the GJ buys, so we were not as aggressive as before. So we took profits at around 21 pips. So that's the trade for GBP USD. I hope as you're going along, you're grasping how ranges work, and if you have any question, you could ask in the comment section. Okay, so let's move to gold. So for today, gold was a bit choppy. I'm not sure if I could find an example that would illustrate how ranges would have worked. Okay, let me see these are my sessions. Okay, so for today, I understand why gold was choppy. We didn't have a trade on gold because today was a US bank holiday. That's why I can't seem to understand why gold isn't moving at all. So gold has been in this range basically for the whole day. Maybe for tomorrow we could get some positions, but today we stayed out of the market since we were having a bank holiday in the US. Okay, that's the first part of the video. So let's talk about how price action moves and market structure, and exactly how to draw ranges and how to perfect your ranges using different biases. So the first example, the daily bias is bearish. So we have our lower lows, maybe something like this. Okay, so in this situation, you want to have your support, resistance, support, resistance. Okay, so when you come to the market at around this part, I want you to go step by step. The market is bearish. Don't worry about what's happening from around here moving forward. I want you to draw ranges with me step by step. Okay, so here we had our range 1 where we could only take sales, then we have our range 2, okay, sorry for that, it's not range 2, range 2 is above here, this is our range 1. Okay, so we have the range 1 and range 2. Price is bearish and you can only take sales, so you take sales going downward. Buys would only happen if you closed above range 2. Okay, let's move on to the next range. So where price is basically range 1, where price is not is range 2 according to the daily bias. So here we have our range 1, here we have our range 2. So I want to illustrate how a fake out would have occurred. So this here is a fake out. So price was bearish and you're in range 1. Price closed above range 1 therefore illustrating a breakout above resistance. Most traders would take a buy at around this area, leading to a fake out. Okay, so what you do in this instance, when price closes above range 1, wait for it to close above range 2 for buys. Price did not close above range 2, closed back into range 1 for a fake out. Have more sells. So I want to show you an instance where you would have taken buys. So in that case, price moves. This is how you would have taken the buys. Price goes into range 1, closes above range 1. This is where you're going to have your buys. Only a closure above range 2 is when you can have your buys. So this is during a bearish market. Hope we're together till that point. So I'll quickly go over bullish market because it's basically the same thing. So let me go over this quick. You want to draw out your zones. As you know, anything between two zones is a range. Okay, so range 1 buys. So here we have a fake out. So we're going to draw our ranges to see how we could have avoided that fake out. Range 1. Okay, so when price was around this area, price closed below. Many traders would have said price closed below support, so what happens? We sell. Wrong. You only sell when price goes below range 2. So price faked them out and went back and closed into range 1. This is where price action traders flourish, take a buy for the upside, since the daily bias was bullish. So you always want to have one daily bias and can only change the bias when price closes below or above range 2. So with that in mind, only having one bias, here's how you'd have caught a sell. So if price could have just moved down, closed below range 2, you would have had your sell basically. This is how you would have entered a sell at around here. Closure below range 2 only. That's if price is opposite to the current market bias. Hope everyone's understood to that point. So my next video will be on entries rather, because today I've talked much about setups, so tomorrow we're going to talk about entries. So have a good day, trade cautiously. Let's meet in the next video. Don't forget to leave a like and subscribe.